Hey everybody, Josh Sigurdson of World Alternative Media here, and we're joined once again by Mark Gonzales over at First National Bullion. And speaking of bullion, we are seeing history in the making right now, my friends. We have never seen anything like this before. We have gold and silver both seeing insane highs. And a lot of people are asking, when is this going to end, or if it will ever end, or where's the volatility, or what will we see 5 or 10 years down the line? Gold has room for upside, says Zero Hedge. Goldman maintains a $4,900 PX target on continued massive central bank buying. Well, they know something is happening, and maybe we should be aware of it too, with the banking system on the edge of collapse, of course, inflation continuing to go sky high. Also out of Zero Hedge, stocks, bonds, bullion, and Bitcoin bid as bad data lifts rate cut odds. If we look at silver right now, as I say this, so it's moving and so flexible right now, it's $58.88 per ounce. Gold is sitting at $4,208 as I speak. And we are seeing history in the making right here, as I mentioned before, my friends. And I want to go into what this actually means. We also see some evidence of potential market manipulation going into the future as well, coming from some big banks. So we're going to get into that and more today, my friends, and what you need to know. But before we do, I urge you to check that link in the description for firstnationalbullion.com/schedule-consult/. It has to be that exact link. It's in the description, as I mentioned, my friends, and it's easy to find. There you can avoid the incoming CBDCs, the digital ID system, the collapsing banking system, the inflation. Ensure your wealth today. Zoom out for the long term, my friends, and buy physical gold, silver, platinum, or palladium. You could hold it in your hands, put it in a vault, put it in an IRA outside of the traditional IRA system, and schedule an appointment for a free consultation with Mark Gonzales. And you also get a complimentary investors package. Just let him know in the comments of the forum when you sign up that you found him at World Alternative Media, or WAM, WAM. Again, that link is in the description. Make sure not to use any shortened version of it. It's there, easy to find. And Mark, we're seeing history in the making, and something that we've been talking about would happen for a very long time. And of course, we've seen little pullbacks, but then we see new all-time highs, and people are wondering what's going on, and is it too good to be true? Are we going to lose it in the near future on this? Again, I always urge people, zoom out on the charts. This isn't about what happens in the next month, 1 year, 2 years even. In the face of the economic crisis we're facing, it's so important that people insure their wealth. Zoom out 10 years and see where you are. In fact, go back 40 years and see where you'd be if you, by that inflation rate at that time, got into gold and silver. Mark, what's happening? We're seeing these numbers. It just seems almost too good to be true.
Not too good to be true. I mean, this is just getting started, right? It's getting started because, we're kind of at the beginning of the end with the current monetary structure. So let's go into one of the articles that you were talking about, and I forget which one. It's 4,900 gold price, yeah, or is the target. So that to me is low. For one, you're going to see a gold price, I believe, in 26 at the end of 26, way higher than that. But what the article essentially is talking about, it's going into central bank buying, which is something we've discussed many, many times, with the repositioning, the rehypothecation, and pulling metal back to one's country and then adding to that stockpile. So central bank buying since 2022 has just been record highs, beating record highs. So let's go back into what happened in 2022. You had the Ukraine war and you had sanctions, which was the shot across the bow to instill fear in the weaponized dollar system, whether it was done intentional or not. Now, to me personally, I think a couple of things came from that narrative. Yes, the U.S. and other governments are going to go after the bad doers, but it's also a patsy, in my opinion. The cover to signal this transition of the central bank buying, which on a monthly basis last month in or September, because these get delayed reports, you had 64 tons of gold be delivered to central bank. Now that's over 2 million ounces. The average on the last 12-month running average is about 67. So central bank buying is completely off the charts. Private family offices or private wealth within families is absolutely off the charts. And
what do they know, Mark, that they're not telling us, do you think?
Oh, probably a whole hell of a lot. And even with the demand that we've had on a retail sector, which has been pretty high. That has just in the last 30 days, they started to accelerate to off the chart. So you correlate these two together with what is going on in the metals markets. Like you had problems with the COMEX, you had problems with the London markets. Now you're having problems with Shanghai. There's just not as much metal out there because, you know, you look at the ounces on a balance sheet that a bank has or does not have or claims to have, it's not all there. So when someone's demanding national delivery behind the scenes, you're getting this accounting reworking or gimmicks to try to live to fight another day. And that goes back to everything I've been telling people before. The dollar is just the accounting measure. Everything is, for the most part, just BS on the checks and balances against actually what it represents. So you want to make sure that you have the actual metal going forward.
Yeah, absolutely. Well, and we're seeing, like, alongside that central bank buying, we're seeing people line up down the streets at this point to buy physical gold and silver. There are shortages across the board, and we're seeing what appears to be some push for some form of market manipulation here. Of course, when we're dealing with an actual solution, the establishment will do what they need to do. One, to make money off of something that I don't see as an investment as much as it is wealth insurance and everything. But, you know, we see spoofing in the markets and everything. And of course, two, to essentially, muddle the market until they stock up on as much as they can. Mark, do you see evidence of kind of some kind of market manipulation by the banks at this point?
Oh, 100%. We've been seeing it for a long time, and it's clearly evident if you just even look up at a chart. And you can look at a spot chart, you can look at a futures chart. But whenever you see deep dives, let's say you're looking at a 3-day or even a 24-hour spot chart price, because spot trades almost 24 hours a day. It closes for 50 minutes a day, opening up the same day for the following morning, closing for the weekend, opening Sunday for Shanghai's Monday. And when you see a massive dive, it's either spoofing or direct selling, but you're generally going to see it when you're going from an exchange close to an exchange open, because there's a very thin trading. There's not enough buyers to actually absorb the amount that's being put out there. So if you spoof, you get the narrative. If you're actually selling, you're selling the paper. No one's there to buy it. You drop the price back, you cover. And that is absolutely clear. We saw that in the CME shutdown. So in the CME shutdown, which they have backups, right? If anybody can't see through that narrative, that is just absolutely insane. I don't know, but during that shutdown, and you can hardly find it on a chart, but silver's price actually dumped almost $2 in a nanosecond. It was a flash crash, and the accounting or the balance sheet was rewritten at that time. I think that happened. Also, during the CME shutdown, you had 13.4 million ounces that JP Morgan held on their balance sheet as registered meaning available for delivery. They transferred that. It just all of a sudden balanced. Now they're in the eligible category, which it seems a little counterintuitive. Registered, eligible, registered is available, eligible is not available. So a couple of things happen. They're either covering their accounting gimmicks or they're preventing delivery from those who stand to take delivery of it because they simply don't have next month's delivery backed up. We're in a strange time. So one thing I want to bring to everybody's attention, just so you're prepared. I've noticed over the years I've done this, coming around the close of the year and the holiday season, a couple things happen. One, everybody's looking the other way because of Thanksgiving, because of Christmas. You have thin trading, and you can go back and look at any chart and see what I'm talking about. You're going to see catastrophic moves. You're going to see a lot of volatility. And it's interesting. I started telling a lot of people I work with and customers beginning of last week to kind of look out for this. And then we get the shenanigans of the CME. So a couple of reasons this happens is while it's thin trading, you get the paper shorts, the spoofing going in the market, tanking the price, and then they get a chance to cover and buy it back while everybody's looking the other way. And then also you have institutions as far as hedge funds, banks, people in the metal space that deal with the paper metal. They will sell into the market the paper contracts, raise cash going into the calendar year, and then come the 2nd of January, they start going back and buying paper or physical metal again. So those are the two reasons that I've seen. So be aware, stay vigilant, don't worry about it. It's nothing to freak out about. And keep in mind that like this is just the beginning of mind-blowing price fluctuation, because back in 2015, the CME changed the bandwidth for circuit breakers from $3 in silver high and low and 200 in gold. Now silver can move $12 in a day and it's normal. The machines will not turn back off. So, you could see silver go back to the 40s. You could see silver go back to 70 or go to 70.
Yeah.
And it would be normal. And with gold, it's now 400. So you're going to start to see those. But the problem is, with that volatility, if silver, let's say during the Christmas timeframe, sometime, thin trading, maybe it's, just going into the close on Christmas Eve, this market gets yanked down and silver goes to, $50. I'm not saying that's going to happen, but it's within the bandwidth circumstances. One, if you were able to acquire physical metal during that time frame, one is going to hardly be available because everybody's going to buy the dip if that's available. So your premiums are going to go up. But it's just kind of this shell game accounting gimmick. So don't freak out, because where this price is ultimately going to be going, it's going to be mind-boggling. So, I don't think people should be necessarily so concerned with the price that they're buying at, even though you want to get a fair deal.
Yeah.
Because the actual price you pay versus what the market represents as a price discovery is going to be drastically distorted. So be on the lookout for that. That's something I just want to bring up to people.
And by the way, I mean, we always see disruptions in the new year too. So there's no saying what could happen next as far as in the news, what might hit the news headlines. I mean, every new year going into the next year, we always see something crazy happen. I want to mention back in 2012, I bought a bunch of silver at $32 an ounce and felt super disappointed in the years after, because we saw it go as far down, I think is $7 or something like that, 9 or 7. I can't remember the exact number, but I remember thinking, oh man, I bought all this, and me knowing well, because I've been studying, monetary principles since, going back to the age of 12. But I saw this go down to I think about around $7. And I thought, oh man, why did I buy so much at $32 an ounce in 2012? Look at the reality of what we're seeing today. It's coming up on almost double of that high. I believe it was $32 or $33 was a high in 2012. It could have been a little higher, but my point is we're seeing almost double of that, and it's carrying on perfectly with the inflation rate. So again, this is about zooming out. At the end of the day, what we're seeing right now is it's not just a technical recession. I mean, the last recession never ended, is being papered over. This causes a major bubble. We see a housing crisis. We see an unemployment crisis. 32,000 jobs were wiped out just in November alone. And of course, and that's in the US. And of course, we are seeing an issue with banks. They're bankrupt. The cash to deposit ratios are above or below 1%. Derivative exposures are through the roof. We're seeing the return of the collateralized debt obligations and credit default swaps when it comes to the housing markets. We're seeing the market manipulation heat up. We're seeing all these crises around the world. And then, of course, we have the incoming digital system, digital IDs and CBDCs, central bank digital currencies. If that isn't enough, well, look at inflation. So again, there's so many reasons for people to be saying, hey, maybe I should do something about these incoming disasters, which are all manufactured, by the way, to push people into complete complacency. We have options there. We have silver. We have gold. We have these things that, by the way, even if they drop down to $40, $45, $50 from $58 an ounce for silver, or even if we saw, again, like a 10, 15% dip in gold, at the end of the day, zoom out, look at the inflation rate, look at the gold silver ratio, look at how gold and silver have both held their value versus inflation and crisis for millennia, and understand that this isn't about what's happening in the next month. This isn't what's happening even the next year. It's about what happens over a long enough timeline where it's something that will save you from the inevitable here. And it's hard to avoid the reality that we're witnessing today when we turn on the TV. Do people still watch TV? When people open up their phone or look on the internet or look at the news, it's hard to avoid the realities that we're witnessing, that this is not a time of great relaxation and stress-free, do whatever you want. It's not 2003, my friends. This is 2025 going into 2026. We know things are shaking up, and we see the evidence just by central banks mass buying up silver and gold right now. And of course, people in masses buying it up, and also massive shortages across the board. This is an opportunity, I think, Mark, for everyone to really get prepared today. And I urge people, again, check that link in the description of the video, firstnationalbullion.com/schedule-consult/ Has to be that exact link. I know it's kind of a mouthful, but it's there in the description. Don't shorten it. Make sure you use the whole thing so you can work with someone like Mark. Mark Gonzales will give you a free consultation when you schedule that appointment, and you'll get a complimentary investors package. Mark's awake, aware of what's happening, aware of the move into the digital system, aware of the manufacturer crises we're witnessing today, and why it's so important to actually stock up and prepare. Let him know when you sign up in the comments of the forum that you found him at World Alternative Media, or WAM, WAM, and buy physical gold, silver, platinum, or palladium. Hold that gold or silver in your hand, put it in a vault, put it in an IRA outside of the traditional IRA system. This is an opportunity, my friends. So, Mark, as we close it off, anything else you want to add just to kind of wrap things up here?
Yeah, absolutely. Okay, so I just want to reiterate that there's a million reasons I can go into. I mean, we could talk for hours on the purposeful function of metal and why you should be buying it based on what actually is going on today. But the thing that people need to realize, and you were talking about 2012 around $32, the price it actually went to, it opened up at $11.04 on a Monday. I forget the day, a week before the world started to shut down. But by the end of that day, you couldn't source an ounce of silver for anything less than 20 to $22. So you're going to see massive spreads. Now that eventually worked out because manufacturing, BS, all this stuff started opening up again. So you're going to see something similar to that. Maybe not just a massive market crash, even though we expect volatility, but you're going to reach a point where you're not going to be able to get the metal itself because you're competing against the strong conviction of central banks buying and private family offices. Now, private family offices, if you don't know who that is, that's wealthy family money. They actually have corporate businesses that go and buy these products under the assumption of them having essentially their own trade desk, like a B of A or like a Chase. So that's who you're competing with, right? And now retail buying is starting to surge. So the banks can outbid you. They can outprice you because they create the money. The private family offices, they've been retaining this money, and sometimes many of these people are one and the same. So don't sit on your hands and wait for that. And one reason that I wanted to bring up before we go into a close that I started noticing is the Japanese yen. The rate on that is starting to rise. Why I'm bringing that up is we did a video about 4 or 5 months ago. I forget, but the yen carry trade, you borrow cheaply in one currency and then you make money in another one. That at the time was about $20 trillion. It's grossly larger now. But at the time of our last recording on it, all hell broke loose on a core base of 20 trillion that supported derivative markets of God knows only who much because of a 15 basis point rise. So now we're not talking about 1.5 basis points or a full 1.5 points. We're talking about 0.15. And we're getting a rising rate. And gold has actually been following the long-term Japanese yield curve for a very, very long time. So be on the lookout. There's pitfalls everywhere. And I mentioned before, right side of the trade. Okay. Things don't fall until all the accounting and everybody that has doing all the nefarious things, shorting things they shouldn't have, running fast and loose with the gold and silver markets, the derivative markets, they are getting on the right side of the trade. Hence 13.4 million ounces coming off the market. What the hell happened to it? Where the fuck did it go? Is it going to be delivered to Shanghai? Are they using it to cover their balance sheet? It's an accounting gimmick, right? So when these guys are getting on the right side of the trade as aggressive they have been, tick tock. When they're fully satisfied, there's nothing to defend. It falls apart. That's it.
Yeah. Well, this is all the more reason that I think everyone watching, if you have not yet already, or maybe you want to follow up and you haven't, perhaps you've reached out to Mark in the past and then decided, we'll wait and see what happens and not done anything. I urge people, no matter what, go and check that link in the description and reach out to Mark. We're in historic times, and I urge people to definitely take that seriously and get prepared today. The only one that's going to save you at the end of the day, it's not going to be some politician. It's certainly not going to be some banker. It's you. And you have to take that responsibility onto yourself. And one of those things that you could do is just spend that moment signing up and going and checking out that link in the description. Again, it's right below. And I urge people to, as always, hit that like button, share on social media, hit the notification bell, and hit the subscribe button if you have not yet already, especially over on Rumble and BitChute at World Alternative Media. I appreciate it, Mark, as always. I appreciate the insights, and we'll be back with much more with Mark in the very near future. We have a lot to talk about and break down for everyone. But until then, this is Josh Sigurdson and Mark Gonzales signing out from World Alternative Media. Find the truth. be the change.